is the New Zealand USD, which was introduced to us by Rice Rick yesterday, and I do hope Rice Rick is still around with us. If you're still around, give a shout out in the comment section. Rice Rick, I want to be sure you are still around with us this morning, and I do hope you are able to take advantage of these trading opportunities that happened yesterday. Now, during our live session yesterday on the 1 hour time frame, we actually identified a range. Remember, we identified a reversal pattern on the higher time frame. We shall be looking at that in a moment. But within the 1 hour time frame, we were able to spot a range after noticing how price started the week around the 0.598 cents level, and then we saw price climb to as high as the 0.60410 level before some retracement move happened around this area, giving us a choppy situation at the beginning of the week. Then one of the things we said here was that since we had a key level which price action was oscillating around, and of course you know how we use the key level in this community, as long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. And of course, within that range we identified yesterday, we saw price break out of structure of the key level, came back to retest the key level, and I do hope you had your buy limit order. If you did, price came back to test the level before it finally broke out of the 0.60410 area. And if you had missed out on the retest of structure, we had the privilege of joining the breakout of the 0.60410 level, and if you had done that, well done, and kudos to you for being on standby to capitalize on this move. So currently, you should be having a minimum of 2 positions, where the first position is currently running with about 63 pips in profit, while the second position is running with about 27 pips in profit. So we have a total of about 80 to 90 pips at this point in time, which is not bad at all for the first half of the week. Now, you know how we do it in this community, especially when price moves considerably well in our favor. We want to be moving our stop losses accordingly, and let's secure the current position. And to do this at this juncture, I will be suggesting that let's place our stop losses around the second entry, which is around the 0.60410. While you do this, ensure that you give enough space for price action to breathe. Now, with a well-secured position, what is going to be our plans for today? Is price going to continue to the upside, or are we having chances that price action will drop to the downside? Now, if we consider the strength of the US dollar at this point in time, we know that the dollar is not doing very, very well. The US Treasury bond yield has been declining since last week, Thursday, and I'm not seeing any sign that there will be some recovery. I think we saw some recovery during the Asian session, but I'm not sure if that will last long. And if this persists, we might likely be seeing a further rise in price here. Now, another thing that can make a lot of people be mindful of taking any aggressive bet at this point in time may be due to the anticipation of the publication of the FOMC minutes coming up much more later today. And as a result of this, we might likely be seeing some choppy situation go on first before that significant move happens. So we might likely see some oscillations between the 0.60350 and the 0.60410 for a while before price action does break out of that structure. But let's quickly run through the higher time frame quickly, and let's see what is going on around that area before we come back and make a decision for today. So move your stop losses accordingly, lock in the current buy position, and let's see what is going on from an holistic perspective. So I see you, Rice Rick. Glad you're still around with us, and let's see what is going to happen today. Now, yesterday we scaled up into the daily time frame, remember, and let's look at what we really saw on the daily time frame that led to the decisions we made. Now, the first thing we did on the daily time frame was to take into consideration the nature of price action since the beginning of this year. And while we did that, we were able to identify the fact that price action has been bearish, as we saw series of lower highs in this market, which we of course connected to give us this descending trend line. In fact, we had a couple of descending trend line in that regard. However, we noticed something interesting in this market as soon as price got into the 0.586, that was in the month of September. We begin to notice that price was unable to find a lower low to further emphasize the strength of the sellers here. Now we saw what happened in the space of September and on November. We saw how this zone had been resisting all attempt by the sellers to break through this area. So every attempt to break through has been met with strong resistance from the buyers, giving us an idea that we are likely having a reversal pattern. And of course, you know how we do it in this community. Whenever we identify the transition of price action into a reversal pattern, we want to be marking out our neckline, which interestingly is also serving as our key level for this week, and that falls as at exactly the 0.600 level. Now you know what we do whenever we have this neckline. We need price to break out of the neckline to validate the reversal pattern, which finally happened yesterday, as you will see here, as price has broken that structure and has since moved over 70 pips in that direction. Now the question going into today's trading session is, will price continue to climb? We've already seen price break out of the first descending trend line. Then we also have the second descending trend line right there around this area. So will price continue that momentum all the way to break out of that structure? And if that is going to be the case, I think we also have another level that we will be using to guide that momentum further to the upside. So look at what we have here. We have like 0.61200. So I do want you to be marking out that level on your chart. Let me do some readjustment here. I think we still have somewhere around the 0.61050. I think that is very good. 0.61050 level, another psychological level right there. So let's mark that level out, and you can see how that level shares a confluence with that descending trend line right there. So if price action will break out of the 0.61050, we'll definitely want to be adding more buy position. A breakout of that level will also have broken out of that descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, if we go to the past as well, you can see how the level had played a major role in determining the direction of price action, as you will see right here. And of course, as far back as May, and then as far back as April, you saw how that level played a major role. So if price will break out of this level today, we want to be adding more buy positions to our existing trade. So let's scale back down into the 1 hour time frame, and let's look at what is really going on around this area. In fact, we can still have one more level to add more position before the breakout of this level happens. So this level is to, let me bring it in so that we can see it in our screen. So we have the 0.61050, right? All right, so we have it right here. So that is the 0.61050. We're looking out for more buying opportunities at the breakout of that structure. But before the breakout of that structure happens, we also have another barrier here, which happens to be the highest point for this week, and that is the 0.60750. If price will break out of the structure, we will be looking out for more buying opportunities at this point. Now, there are two ways to which we can capitalize on the breakout of structures. I usually mention this in our session, but for the sake of those who are joining us for the first time, so that you guys can be on the same page with us. So there are two ways to which you can capitalize on breakouts of structures, depending on where you are with us. Now, for those of us who have been profitable on this asset since the beginning of the week, you can afford to leverage on some of the profit you had made so far by placing a buy stop order above the 0.60750. Now, if price breaks out of that structure and it doesn't work out, then later drop to the downside, then we know that we are only risking some of the profit we are made, so we are not touching our real portfolio at all. However, if you are new with us and this is your first time taking a position on this asset, then I would encourage you to exercise patience and wait for the breakout to happen, price coming back to retest the structure. Then you want to be joining an uptrend move, and if price continues to climb to the 0.61050, breaking out of that structure, we want to be adding more buy positions to our existing trade. So that is how we are going to be maximizing the potential of this bullish move. Now, in as much as we're looking out for buying opportunities, we can never ignore the potentials that sellers could come in, as the minute we are having today is going to be giving us an insight into the monetary policy of the Fed. And I'm not sure we are going to be seeing any surprises anyways, but if anything happens today and incite a situation where market participants react negatively and in favor of the US dollar, we might likely be seeing some selling traction. Now, if that's going to be happening, how do we intend to capitalize on that one? Well, first and first here is that since last week Friday, price action had consistently found higher lows in this market. So what I want to do here is to connect the series of higher lows, as we shall be needing it to guide our trading decisions today. So let me thicken this a little bit so that we can see things more clearly. So we have an ascending trend line to work with for today's trading session. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable in a buy position. But if at any point in time today price breaks down the ascending trend line, please let's wait for confirmations to happen here, retest of structure and signs that buyers are finding it difficult to climb back above the ascending trend line. Then we can consider some selling opportunity, maybe back into the key level, remember at the 0.600 level. Let me place this right here. Now, if price gets into this area, the appearance of buy pressure will welcome buying opportunity. So we can look out for double bottom structure or reversal pattern to join the uptrend continuation. But if price breaks down, then we want to be looking out for opportunities to add more sell positions to our existing trade. So this is how we are going to be managing the New Zealand USD today. Mark out the ascending trend lines, mark out these key levels, as you will be needing them as a reference point to guide your trading decisions today. I personally think that price will continue to the upside, but if it does break down to this ascending trend line, we have no other choice than to get ready to sell. So these are my views here. If you have any questions, Rice Rick, if you're still here, if you have any questions, feel free to drop them in the comment section. I'm already running out of time right now, so I will just quickly run through the next asset on our watch list, and I will be checking the comment section after I'm done with that one.